Joining us now is one of them, Morgan Stanley Global Head of Fixed Income Research and Public Policy Strategy, Michael Zezas. Michael, again, thank you to you and your team. I've gotten smarter because I'm reading you and your team's work, and it really matters at a time like this. You just heard the Ford news, and again, it's sort of news-ish because we don't know if those are going to happen. I hate the term uncertainty, but I got to imagine that this now is the definition of uncertainty.
Yeah, I think it's totally fair. I think you're exactly right that there are so many plausible ways that these different policy paths, in particular the tariff path, can play out that investors in generally just have to consider multiple possibilities. Now, I think as it pertains to tariffs, I think there's good reason to have some optimism that the level of tariffs that were being talked about a couple of weeks ago ultimately won't be implemented to that degree, because it looks like there's pretty good case for successful negotiation with Japan and maybe even with Europe a little bit further down the line, maybe less so with China. But it all sort of nets out to a higher tariff base than you had before, right? So even if things directionally get better than they looked a couple of weeks ago, the way our economists are mixing it all together is to say we're still looking at a slower growth dynamic for 2025, somewhat higher inflation, and all else equal, higher probabilities of recession. So direction of travel might feel better, but the net effect is still a murkier outlook than we had just a few weeks ago.
No, but your point is really critical. I'm not trying to be a Pollyanna about this. The tariffs may go as they are now. You just said they may not. They may not be the numbers we think. And also, there's a big legal challenge that's going on. And another firm, one of your competitors, putting out a note today saying that the courts may ultimately deem the tariffs are illegal or invalid. There are other things out there which I think you would agree that leave a market risk to the upside.
Yeah, well, so let's talk about some of the circuit breakers, right? So one of them, to your point, is legal challenges. This is an important point because the reciprocal tariffs are kind of premised on this law called IEEPA. And I'm not a lawyer, but a lot of legal scholars think that's sort of a flimsy premise for them. If a court were to put an injunction on these tariffs coming into play, that doesn't necessarily mean that they couldn't come into play eventually. There are probably studies that could be done, Section 301, 232 studies, to kind of stitch back together that authority over time. So I think all we'd be doing there is extending this uncertainty. So I do think we kind of have to live in a world where we expect that the average effective tariff rate that the U.S. is levying on rest of world is still considerably higher than it was in previous years. It just will end up being not nearly as high as what was announced back on April 2nd.
Yeah. Do we believe that the national debt or trade deficits are truly a national emergency? That may be ultimately a question for the courts. So let's take the other side, Michael. If we do get the worst case scenario, which is upwards of 200 whatever % tariffs on some China goods. Because remember, we already have 100% tariffs on Chinese electric cars put on by the former president, right? We're not starting from zero here. And if you know the numbers, please let us know. What's your worst case, base case?
Well, if we live in a world in which, no more exemptions are applied and you're sort of north of 100% on China tariffs and there's sort of no negotiation on the horizon, so they're there for an extended period, then our economists have said that very clearly kind of tips you into recession. I think if you broadly look at markets right now, what our strategists are saying is that we've kind of priced into equities and to credit kind of the first order effects of all of this, right? So the idea that the incremental costs that are likely to endure, we've kind of fed them through and tried to account for the pricing. But the kind of second order and nonlinear effects that could lead you into a recession, that's not really in the price yet. So one of the things that could touch that off would just be long duration of very high tariffs on China.